right, good morning, everybody. This is Todd Mitchell, and it's Wednesday, July 16th. We are looking at Monsanto, M-O-N. M-O-N, as you recall yesterday, I pointed out that this could be a real nice trade down in here. Not only at the 50, but the way it came down and retraced back to the 50 exponential moving average after being obviously in an obvious uptrend, right? We had 1, 2, 3, let's see, we had 1, 2, 3, 4, 5, 6, and then with yesterday, seven consecutive lower highs and lower lows in a strong uptrend. That typically is followed by some type of bounce. Again, this is a probability game, and when you get a movement down the way it moved down with those 7 consecutive lower highs and lower lows, you typically always get some type of bounce. And when you get a move like that, it's usually a deeper pullback, right? It's a deeper pullback, meaning it's just a larger pullback down off the high, which means that the profit targets are going to be much larger than your initial risk. So take a look at this trade. Look at the two white horizontal lines, okay? This white horizontal line now represents the stop, okay? And the reason for that is because today, so far, we've been able to penetrate up through yesterday's high, right? We got a penetration up through that high. So my thought is if the market comes down and takes out yesterday's low, I don't want to be there anymore, because if that occurs, an engulfing pattern occurs. And I just don't want to be there. I'll reevaluate it and maybe keep it on my watch list if it still looks good. So now what I'm doing is I'm really minimizing that risk. Now look at my upside on this trade. This is my first profit target, up at about 124 and a quarter. 124 and a quarter. All right. So my risk is just over a point. In my upside potential is almost 4 points. So we're close to 4-to-1 reward to risk on this trade. All right, just a day into this trade, close to a 4-to-1. Now, if you just sit back and take a look at this right here, look at the lines. Now, this white horizontal line will represent the entry. Okay. All right. So about 120, let's say 120.75. That's where I entered right there. 120.75. So this is the entry, long. This is my stop, and this is my profit target. So just visually looking at the chart, you can see that the profit target, the first profit target only, is much larger than the initial risk, and those are the type of trades you're looking for, okay? Now, look at this. The Dow Jones made another all-time new high today. Look at that, gapped up a little bit and made a new high again. Okay, so the Dow, we've made a new high. The E-minis, actually, we've missed the high by one tick, one minimum price fluctuation. Today's high is 1978. The all-time high made on July 3rd is 1978 and a quarter. So we're testing the all-time highs. Haven't been able to break through it in the E-minis. The Dow, on the other hand, made a new high today. Obviously, the Russell, as we all know, we're far off the highs. And the Qs, right, the NASDAQ made that high today as well. So it'll be interesting to see where the market goes from here. But hey, if you take a look at that Goldman Sachs, remember we pointed that out last week right in here? Look at that move. Look at that nice bounce, testing these highs right now. So hope that all helps. Have a profitable day. And before I let you go, just be sure you watch Doc's calendar spread video. It's about 25 minutes, but you're going to learn a whole lot from it. All you have to do is go to this site right in here that I'm circling in red. Okay, https://tradingconceptsinc.leadpages.net/calendar-spread-strategy. Again, it's a very good video, 25-minute video. He's holding a live class this Saturday. Hope to see you there. I will certainly be attending as well. Have a great day, and I'll be back with you tomorrow. Bye for now.